Hello and welcome back to the QuantScore Financial Show, brought to you by Math and Maticians. Let's be clear, this video isn't about telling you what stocks to buy or sell. We're not here to hand out hot tips or promise overnight riches. Instead, we're taking a step back to understand the bigger picture of how markets work and why they move the way they do. The world of stocks, bonds, and financial assets is vast, and it can feel overwhelming, especially if you're just starting out. The stock market is a complex beast, full of continuously moving parts and unpredictable twists, regardless of market closures. Every day, millions of people around the globe make decisions that affect prices, sometimes in ways that seem random and other times in ways that follow patterns. Understanding the market isn't something you can do overnight. It requires careful study, patience, and a healthy dose of caution. Throughout the video, we'll explore how market sentiment works, how the collective mood and opinions of investors can drive prices up or down, sometimes regardless of the underlying facts. We'll look at the psychology behind market moves and how emotions like fear and greed can shape the financial landscape. We'll also examine how the actions of influential people, like politicians, CEOs, and central bankers, can send ripples through the financial world. A single statement or policy change can shift the mood of the market, causing prices to soar or plummet in response. Understanding these dynamics is key to becoming a savvy market observer. Remember, this is about education, not get-rich-quick schemes. Our goal is to help you build a solid understanding of how markets function, so you can approach investing with confidence and curiosity. Whether you're a student, a beginner, or just someone interested in how the financial world works, you're in the right place. Let's dive in and start learning together. When it comes to the stock market, it's not just about the numbers. Sure, company profits, economic data, all that matters. But there's also a psychological element, market sentiment. Think of it as the overall mood of investors. Are they optimistic and confident, or fearful and uncertain? This collective feeling can swing prices just as much as any spreadsheet. Sometimes a single event or action can shift that mood, and that's where Congressman Robert Bresnahan comes in. Robert Bresnahan, a Republican representing Pennsylvania's 8th congressional district, is a freshman in the House, having taken office in January 2025. But Bresnahan isn't a career politician. He built his career in the business world. He was the chief financial officer and then chief executive officer of his family's electrical contracting firm. This background gave him a sharp mind for finance. It's this experience that makes his recent stock sales so intriguing to market watchers. On April 8, 2025, Congressman Bresnahan made a series of significant stock sales. He sold off large chunks of his holdings in 6 major companies, immediately raising eyebrows across the political and financial industries. Were they a sign of things to come? Was Bresnahan getting out while the getting was good? The timing, just as earnings season was winding down, added fuel to the fire of speculation. So what exactly did Bresnahan sell? When a public figure like Bresnahan makes a series of high-profile stock sales, it's natural for investors, analysts, and even the general public to wonder, what's the story behind these moves? Are they simply routine portfolio adjustments, or do they hint at deeper concerns about the companies involved or even the broader economy as a whole? The companies Bresnahan sold are not just random picks. They're major players in their respective industries, each with its own set of challenges and opportunities. By examining these sales, we can start to piece together a narrative about market sentiment, sector trends, and perhaps even Bresnahan's own outlook on the future. Let's break it down, company by company, with each sale being a potential window into a different corner of the economy, together revealing a broader pattern or concern. First up, Accenture, ticker ACN, is a global consulting giant and a trendsetter for the tech sector. With clients spanning nearly every industry, Accenture's performance often reflects the health of corporate IT budgets and the willingness of companies to invest in digital transformation. If Bresnahan is selling Accenture, it could suggest he's wary of a slowdown in tech spending, or perhaps he's anticipating a shift in how companies approach consulting services in a rapidly changing digital landscape. Was Bresnahan concerned about a slowdown in IT spending? The tech sector has been riding high for years, but with economic uncertainty, rising interest rates, and global tensions, some experts have warned that companies might start tightening their belts. If Accenture's clients pull back on big projects, it could impact the company's bottom line. And that might be what Bresnahan is betting on. Then there's the anomaly, Advanced Micro Devices, or AMD, a major player in the semiconductor industry and a company that's been at the forefront of innovation in everything from gaming to data centers. AMD's chips power some of the world's fastest computers, and the company has been a darling of investors thanks to its rapid growth and strong product pipeline. And honestly, AMD has been on a tear lately. Its stock price has soared as demand for high-performance chips has exploded, driven by trends like artificial intelligence, cloud computing, and the ongoing digital transformation of nearly every industry. For many, AMD represents the cutting edge of technology and a bet on the future. Did Bresnahan think the rally was about to run out of steam? Even the hottest stocks can't go up forever, and some analysts have started to question whether AMD's valuation has gotten ahead of itself. Maybe Bresnahan saw signs of increased competition, supply chain challenges, or simply felt it was time to lock in some gains before a potential correction. Occidental Petroleum, the oil and gas behemoth, is another interesting sale. As one of the largest energy producers in the United States, Occidental's fortunes are closely tied to the price of oil and global energy demand. The company has weathered booms and busts, and its stock can swing wildly with every geopolitical headline or shift in supply and demand. With oil prices fluctuating due to everything from OPEC decisions to global conflicts and the transition to renewable energy, it's possible Bresnahan saw increased volatility ahead. Maybe he's anticipating a drop in demand as economies slow, or perhaps he's concerned about new regulations that could impact profitability. Was Bresnahan betting on a drop in demand or perhaps increased regulation? Pfizer, ticker symbol PFE, is a pharmaceutical giant and another company that's been in the spotlight. After the pandemic, Pfizer's revenues soared thanks to its COVID-19 vaccine, but now the company faces questions about what comes next. The pharmaceutical industry is notoriously competitive, and companies must constantly innovate to stay ahead. With key patents set to expire and generic competition looming, Pfizer's future growth is far from guaranteed. Investors are watching closely to see if the company can deliver new blockbuster drugs or if it will struggle to maintain its momentum. Was Bresnahan worried about patent expirations or maybe competition? The pharmaceutical sector is full of risk and reward, and timing is everything. If Bresnahan is selling now, it could mean he's concerned about upcoming challenges, or simply that he wants to reduce exposure to a sector known for its unpredictability. Thermo Fisher Scientific, a life sciences company that supplies labs around the world. This company is a backbone of scientific research, providing everything from high-tech instruments to essential lab supplies. Its fortunes are tied to research funding, innovation, and the pace of scientific discovery. Was Bresnahan concerned about a decline in research spending? With governments and private institutions facing budget pressures, there's always a risk that research funding could dry up, impacting companies like Thermo Fisher, or perhaps he's simply rebalancing his portfolio after a period of strong performance. And then Texas Instruments, a leader in analog and embedded chips, and a company whose products are found in everything from cars to industrial equipment. TI is often seen as a proxy for the health of the broader electronics industry, and its results can offer clues about trends in manufacturing, consumer demand, and global supply chains closely tied to the broader tech sector. If Bresnahan is selling Texas Instruments, it could signal concerns about slowing demand for electronics, supply chain disruptions, or broader economic headwinds that might impact the company's customers. Was Bresnahan sensing a downturn in electronics manufacturing? The global economy is in a state of flux, and companies like Texas Instruments are often among the first to feel the impact of changing consumer and business spending patterns. These are just possibilities, of course, and without direct insight into Bresnahan's thinking, we can only speculate. But by analyzing the timing and pattern of these sales, we can start to form educated guesses about what might be driving his decisions. Is it a reaction to market volatility, sector-specific risks, or simply a desire to diversify? But they do illustrate how a single politician's trades can spark a flurry of analysis and debate. Every move is scrutinized, every sale dissected for clues about the future. In the end, Bresnahan's trades remind us that the stock market is as much about psychology and perception as it is about numbers and charts. Whether these sales prove prescient or premature, they offer a fascinating glimpse into the intersection of politics, business, and the ever-shifting tides of the global economy. It wasn't just these 6 big sales that caught the eye. Bresnahan also offloaded smaller positions in a variety of other companies. These ranged from tech titans like Apple and Alphabet to industrial giants like Home Depot and Johnson & Johnson. This broader sell-off painted a picture of a man reducing his exposure across the market. It suggested a cautious, if not outright bearish outlook. The idea that politicians might use their positions for insider trading is nothing new. It's a controversial topic that has sparked calls for stricter regulations. But even if Bresnahan's trades were perfectly legal and ethical, they still matter. They matter because they provide a rare glimpse into the thinking of someone with access to information most investors don't have. When someone like that makes a move, the market takes notice. So, what can we learn from all this? First, it's crucial to remember that past performance is not indicative of future results. Just because a politician sells a stock doesn't mean it's going to crash and burn. Second, it's essential to do your own research. Don't blindly follow anyone's trades, no matter how influential they may seem. Use this information as a starting point for further investigation. Finally, remember that investing always involves risk. Never invest more than you can afford to lose. Thanks again, and until next time, stay calculating, my friends.